Hello everyone and welcome to today's session. So today we are going to cover very important chapters, that is a chapter 11 and a 12. Why I say important is because we will be talking about in chapter 12 about the future of the audit, that the digital audit and auditing digitally. And chapter 11, with this we will mark the closure of these standards that we have, we will be covering all these standards together. Okay. So before I proceed, I would like to know how many of you have gone through the previous lectures or the lectures which are uploaded on the portal. Okay, if you are not, then please I request before watching this lecture, before even before if you what do you say, even in the next lecture, before coming to the next lecture, I would request everyone to visit and watch the previous lectures which are there on the portal. Okay, because that will provide you a good understanding. Abrakesh, uh, after this session, please go and watch that particular lecture because that will help you to understand the concept in more detail. Okay, so now let's start with chapter 11 first. Now, chapter 11, that is standards on the assurance engagement. Basically, what this talks about. When I say standards on assurance engagements, okay, so there are three standards which have been provided for the assurance engagement as on today, which is one on the your examination of prospective financial information. Second one is on the assurance report on controls at service organization. And third one is that assurance engagement to report on the compilation of pro forma financial information, which is included in the prospectus. Now, why they are known as a standards on assurance engagement? The reason because these are assurance engagement, unlike the earlier ones, whether we either had an agreed upon procedure or limited review engagement. But here we call them as a reasonable assurance engagement. Here we provide reasonable assurance the way we do in the audit. Similarly, we provide reasonable assurance in these engagements also. Okay, so the assurance engagement or the standards on assurance engagement deals with a specific category of the engagements I will be talking about. Okay, so the first one, that is SAE 3400. That's the standards on assurance engagement 3400, which talks about examination of prospective financial information. Now, can anyone tell me what is the difference between prospective financial information and hypothetical assumption? What is the difference between prospective financial information and hypothetical assumption? Anyone? So, because that is very important for us to understand to start with, what is a prospective financial information? What is a forecast? What is a projection? And what is the hypothetical assumption? Okay, Rakesh. Yes, very good. Understood. Okay. Anyone else? Okay, Manish. Okay. So, when it comes to the prospective financial information means financial information that is either based on the assumption, okay, about the events that are going to happen in the future. Okay, and is highly subjective in nature. It can be a forecast, it can be a projection, it can be combination of both. So when I talk about prospective financial information, it includes both a forecast, a projection, both. Okay. So prospective financial information means financial information based on assumptions about the events that may occur in the future. It can be a forecast, projection, or a combination of both. Now, what is a forecast? Forecast means prepared on the basis of assumptions as to future events, which management expects to take place in the future. Means management knows that these events will take place in future. They are also known as the best estimates assumptions because management has the details about this particular event. Management has some information about this particular event. That's why they are able to predict or forecast a particular event. When it comes to projection is an hypothetical. Projection means prospective financial information only, but which is prepared or based on hypothetical assumptions about the future events and management actions, which may not be necessarily happening in the future. So for example, that I will let's say a company is there, the company is planning that okay, they will raise funds in the future. With the use of funds, they will develop one more product and the manufacturing line, and accordingly they will manufacture more products, their revenue will increase. Everything is here is a hypothetical assumption based on they will raise some funds, and if they are able to do that. So that is a hypothetical assumption which may not necessarily take place in the future. Okay. So projection is based on either hypothetical assumption or some hypothetical assumption plus best estimate assumptions, mixture of both. Okay. So that is in projection. When I talk about difference between both of them, you can say that forecast is more kind of not accurate, but with more details, with more information that will allow you to analyze, or that will allow you to predict or to understand that forecast or understand the impact of the forecast in the future. When it comes to the projection, they are kind of not necessary that the event may happen, means they will be purely assumptions, or sometimes they will be based on the estimate or best estimate assumptions, but basically they are hypothetical assumptions. If this will happen, this will happen, this will happen, this will happen, may not happen at the end. So not necessary this will happen, but these are kind of projections. Okay, management thinks okay, if we'll do this, we will get this particular information or this particular outcome or something like that. So they are little uncertain, not kind of accurate, I would say, when this comes to the assumptions and the forecast. So I hope you guys are now clear with the terms of forecast, projection, and prospective financial information, because that is the base that we want, that is the base for the whole standard. Any doubt? Okay, no? Now, let's understand the purpose of this particular essay now. So, the name suggests the examination of prospective financial information, which includes both my forecast and projection. So, when I want to examine the forecast or projection, I need to examine in such a way. Okay, like forecast has details. This is the best estimate assumption, and this is hypothetical. So accordingly, when I will examine forecast or projection, I need to be careful, or I need to understand, okay, what information I need and what information I need to check with. Basically, this particular standard guides the auditor in terms of what to examine when it comes to the prospective financial information and how to issue the report. And it requires that the auditor should obtain sufficient and appropriate audit evidence. And now we are coming to the sufficient and appropriate audit evidence because it's a reasonable assurance engagement. Remember that. Whenever there is a reasonable assurance engagement, it comes that sufficient and appropriate audit evidence, or rather here, assurance evidence, or you can only say evidence. So sufficient and appropriate evidence is required. Okay, for what? For to validate and understand, again, to validate and understand management's best estimate assumption, whether they are unreasonable or not. Means whether they are when I talk about best estimate assumption, they should be backed by information. And if I say unreasonable, means they are not backed by information, so I cannot call them best estimate assumption. So I need to identify whether the best estimate assumptions that management claims, okay, these are the best estimate assumptions, I have all the information and accordingly I made forecast and everything, whether they have the proper information behind that or not. That is something we need to understand, and we need to identify whether they are reasonable or not. So whether best estimate assumptions are reasonable or not. And in case of hypothetical assumptions, now these are always, assumptions which are not necessarily backed by the proper information, or you could say, these are hypothetical in the nature itself. So as a result, are they consistent with the purpose of the information? I cannot say that they should not be unreasonable because they are hypothetical. So unreasonableness doesn't work for the hypothetical. But what at maximum I can check for them is the purpose of the information. So whether these assumptions are in line with the purpose of information or not. If that is the scenario, then it is fine for me. Yes, so this standards applies to both forecast and projection. Okay. Now, when it comes to the prospective financial information, once I have estimates, so once I have forecast and projections, management is required to prepare this particular information in a particular way. Okay. So I need to verify whether the presentation of prospective financial information is appropriate or not. So appropriate assumptions, details, and everything has been disclosed or not. So presentation of PFI on consistent basis should be there. Proper presentation should be there with adequate disclosures. Proper preparation of PFI should be there. So preparation, presentation, and disclosures of PF. When I talk about PFI, it is a prospective financial information. Clear? Any doubt till now? Any doubt? No? Okay. Now, again, whenever there is an engagement, there are requirements with respect to ethical standards, acceptance of the engagement that is going to apply to each and every case. As a result, what do you think? What should be the requirement, or what is the requirement of uh, you know ethical standards or the acceptance on the engagement? So can anyone guess what will be the requirement regarding the acceptance of the engagement? No. Basically, this standard does not, reinvent the acceptance of engagement. No. The concepts which are there already in SA 210 with respect to client's acceptance and agreeing on the terms, they are applied over here also. They are followed in similar way. So when it comes to the acceptance of engagement and other matters, you can say that SA 210 is followed. SA 210 is followed. Okay. That means that before accepting the engagement, I should agree the terms with the terms of the engagement with the client. Okay. I should have a written engagement letter to avoid misunderstandings and everything. Clear? Then once I do the acceptance part with the client and with the engagement side, then I need to understand the assurance that I'm providing over here. As I told you, this is a reasonable assurance assignment. Now, what kind of assurance I can give? In audit, can anyone tell me what assurance I provide? In audit, what kind of assurance and what assurance do I provide? Anyone? Munish? Abrakesh? Yeah, correct. Reasonable opinion, reasonable assurance. But what is the assurance that I'm providing? That is a type of assurance, reasonable assurance, that is fine. What is the assurance that I'm saying? What do I say in audit? What is my opinion generally about? Okay, it is in the line of respective standards. Yes. Munish, like what I express in my opinion when it comes to the audit. Pretty simple, straightforward. Yes, this is absolutely correct for this one, Munish. Yes. Anyone? Okay, I'll tell you. Now, understand one thing here is that when I talk about prospective financial information, okay, here I am not like like in audit, what I do in audit, I issue an opinion that the financial statement which are prepared, they provide true and fair view of the books of accounts. Okay. And they are free from material misstatement. That's the kind of assurance I give. That's the kind of opinion I give in the audit. But here, can I say that the prospective financial information prepared is free from material misstatement, or is reflecting true and fair state of books of accounts? No, I cannot, because these are the information or the events that have still not happened. Therefore, I cannot say that these are either true or fair, true or correct, or something on the similar lines. Then the question comes that if I am not able to issue such a kind of opinion, then what should I do? What should I issue in the opinion? Okay, if I'm not able to say in my report that okay, these are true and fair or the true or correct, then what should I write in my report? Like what should I mention in my report? Anyone? Okay. Good, Rakesh. So what I see over here is that whether the prospective financial information, understand one thing, what I say over here is whether the prospective financial information, in my opinion, is properly prepared basis on the assumption or not, and is presented and disclosed as per the applicable financial reporting framework for the prospective financial information. Means once I will say whether they are prepared as per the assumptions or not. So here the base is the assumptions, the forecast and the projections. Okay, not the books of accounts. So in audit, I used to say whether they are prepared as per the books of accounts or not. Here I will say whether they are prepared as per the assumptions or not, and whether they are complying the presentation and disclosure requirement of applicable financial reporting framework. That is the assurance I am going to give in this particular engagement. As a result, I need to have evidence that should support the assumption. Okay, that is prepared by or stated by the management. Here, the underlying criteria against which I am evaluating are the assumptions, and for that I need to have sufficient and appropriate evidence available to me to support that assumption. So, evidence should be present. Evidence should be available to support the assumptions on which the PFI is based. Now, as I had told you that these are the future oriented events, and they have not actually have happened in the current scenario. They are still of future, pertaining to future. So I am not in a position to express opinion on the assumptions. No, I'm not issuing opinion on assumptions. Wrong. I'm issuing opinion on the PFI, whether they are based on assumption or not. Okay. So not in a position to express opinion whether the results shown in the PFI will be achieved or not. Okay. If I give such kind of opinion that management has said that in next 10 years they will achieve 100 crores of sales, for example, if I give an opinion on that, means I'm giving an assurance that okay, these assumptions that the management has made are 100% accurate and they are going to happen. That's why the management will meet the forecast, and that will be incorrect. I am not issuing any opinion on any of the assumption. No, no. I am issuing opinion that the prospective financial information, that is the projection for the 10 years, whether they are made based on the assumptions or not. I'm not talking about the assumptions. I'm talking about the prospective financial information which are based on the assumptions. Understand the difference between both. That's why I say this could be a reasonable assurance or a moderate level of assurance of engagement. I hope I am clear. Any doubt, guys? This is a very important part to understand for this standard. That on what thing I am issuing an opinion. Any doubt? Any doubt, guys? Okay. Now, to understand the assumption, see, understanding of the assumptions is required. In order to understand the PFI, we need to understand the assumptions. To understand the assumptions, there are certain things that we are required to do. For example, we are required to understand the business. Okay. What is a business? Level of knowledge about the business, significant assumptions. So, for example, let's say company is manufacturing tobacco. Okay. So let's say company is manufacturing tobacco. Now, what happens is company is projecting that in next 10 years, sales will be 500% increased. But what I understand, okay, this is the management assumption. But what, as per my assumption or my understanding is, government is going to impose ban on tobacco products. So this one is a management's assumption that in next 10 years, sales will be 500%. But this is my understanding that the government is going to impose ban on tobacco products in next year because something is going on in the market and government is considering to impose a ban. So as a result, before I can say whether the prospective financial information, which is based on this particular assumption that the sales will be 500%. Okay. Now, prospective financial information prepared on this assumption is correct or not. For that, I need to understand the assumption, and for that, I need to understand the business. Is it possible to increase the sale to 500%? Is it possible that they can increase sales so much? Or, government is going to impose a ban? It is totally different scenario. So, as a result, the assumption taken in this case is not correct. It's not appropriate. It's practically unreasonable. The term we use over here is unreasonable. Okay. Now, if the assumption is unreasonable, in that case, I can say that, assumptions are unreasonable. As a result, prospective financial informations are prepared on the basis of unreasonable assumptions. But for that, I need to have an understanding of the business, what they manufacture, what they do, what they don't do, what is the market scenario, everything. Then only I can, verify the assumptions. So I need to understand about the business. Okay. And for that, I may need to have, information about industry type, business, sector in which they are operating. If I have done any previous engagement for them, okay, management's competency for preparation of such information. Is management competent to prepare such complex information? Likelihood of misstatement, management's judgment, biasness involved in this, source of information, stability of entity's business. For example, a normal retail business will be more stable compared to a tobacco or businesses which are dealing in restricted products. And then source and reliability of the evidence. All these things I need to understand. And on the basis of that, I will be concluding whether I have sufficient and appropriate audit evidence or sufficient and appropriate evidence or not. Clear? One very important part is a time covered of the prospective financial information. Since assumptions become more speculative at the length of the as the period increase, that means I cannot predict with accuracy about next 15 years, but I can predict next year. So the more the term, the less the accuracy or the less will be the definitiveness of that particular assumption. And the lesser the term, the lesser the period, less speculative or variable or changing assumptions will be there. So I need to consider the period for which the assumptions are made. What if I make an assumption for next 50 years? Would you be calling that that assumptions? Can I make an assumption for next 50 years? Can anyone make an assumption for next 50 years? What do you say, guys? I'll make an assumption for next 50 years, and on the basis of that, I'll prepare financial statement, prospective financial statement for next 50 years. Do you think it is reasonable to do? Do you think you can forecast or, based on the assumptions, you can predict the events that are going to happen in next 50 years? Yes, no. Absolutely correct. We can prepare based on assumptions, but whether the assumptions will be reliable or reasonable, answer is no, not at all. But if you ask me, can I do it for 1 year, next 1 year? You would say yes. You would definitely say yes. Okay, you can present, and prepare prospective financial information for next 1 year. And the assumptions will be reasonable also in that case. Like, okay, 5% increase of sales, 7% increase of sales. The longer the term, the more variability will be there and the less reliability will be there. Clear? Any doubt till now? So when it comes to now the third last part of this particular standard is the reporting. When it comes to reporting, what I need to check or what I need to do is I need to see whether the prospective financial information should not be misleading. One, I need to check whether they are not misleading. Accounting policies are clearly disclosed. Assumptions are disclosed. Okay. Basis of establishing range or points or assumptions should be there. Okay. If there is a change in accounting policy, then the effects of such change should be disclosed. Okay. So these are the things I need to check when I'm, doing the examination of the prospective financial information. And these are the things on which I need to report upon. So the report generally will include simple. First, PA, that is title and addressee. Then you need to identify the PFI. Okay. You need to provide a reference to the standard and then a statement about the management's responsibility. Okay. Now, what you need to do is a kind of a restriction that, this particular report is, for this purpose only and should not be distributed for any other purpose. So kind of a restriction that we impose on the distribution. Then, then we can say, examination that we have done, or you can say procedures that we have performed, like test basis, evidence and everything. So examination of the procedures, okay, examination procedures that we have done. Then whether the assumptions provide reasonable basis for such information or not. Means I am talking about whether the information is based on the assumptions and they provide the reasonable basis or not. So kind of a negative assurance on the reasonable basis of such assumptions. Then you have an opinion. Okay, what is the final opinion with respect to presentation and disclosure of the PFI with respect to applicable financial reporting framework. And then DSP, that is a date, place, signature. And before DSP, there is a section called caveats. caveats means where you provide, kind of scenarios. Okay, subject to. So I have gone through, but subject to this is, or appropriate caveats like, if this has happened, then we can say, okay, the result could not be achieved, or assumptions will be what do you say, not reasonable, kind of that. So caveats will be the thing that will be there, and then date, signature, and place. Yeah, date, place, signature. So if you want to summarize in a shorter form, that is title and addressee, your identification and reference to standard, management responsibility. Then you have a reference or restriction on the distribution. Then you say examination procedures. Okay. Then you give a kind of assurance on the, negative assurance on the reasonableness of the assumptions. You issue final opinion and the caveats, and then date, signature, and place. So this is how you can summarize in a simpler way the whole reporting part. Clear? Any doubt till now? Any doubt? No? Next, if no doubt, let's see the next standard, SAE 3402. So I'll cover all the three SAE and then we'll go to the question part. Okay. Then we'll discuss questions in detail. So SAE 3402. If you want to understand in a very fast and quick way, it is kind of a similar standard which is SA 402. So if you take 402 from this and if you take SA from this by leaving E and 3, then it is nothing but a kind of extension of SA 402, but or the same thing applicable for the service organization. Now SA 402 is applicable to auditor who is auditing in service organization environment. Okay. Who is auditing in service organization environment or who wants comfort on this service organization. Now, this comfort is provided by service organization auditor. Okay. So they provide type 1, type 2 report. In that case, this particular service organization's auditor provides type 1 and 2 report. Okay. Now, this particular standard, SAE 3402, is for the purpose of this report. This guides the service organization auditor that how to issue type 1, type 2 report in a summary way. So basically, this provides guidance to the service organization auditor. When it comes to SAE 3402, it is applicable to service organizations auditor for issuing report, which is there as per SA 402. That is a type 1, type 2 report. On one hand, auditor is being guided by SA 402. On the other hand, service organization auditor is guided by the SAE 340. So you can, consider how both of them are linked. Any doubts on this one? Any doubts? Okay. Now, before we proceed further, in this particular standard, there are few things we need to understand very clearly and appropriately first. Okay. This standard applies. Okay. This standard applies only when the service organization is responsible for. Okay. Responsible for the suitable design of the controls, where they have made an assertion about the suitable designs of the controls. So it is talking about description of the service organization's control. Okay. But this standard does not deal assurance engagement, which are to report only on whether the control at the service organization are operated as described. So they will not only cover the controls part alone. They will not cover the control part, but they will or are based on the assertions that are made by the service organization. Okay. So this standard does not deal with the report only on whether the controls at the service organization are operated as described. No, it will not deal in that scenario, but it will deal that whether the service organization is responsible for, when the service organization is responsible for or is making an assertion about the suitable designs of the control, then in that case, this essay will be applicable. Clear? Any doubt? Any doubt, guys? Okay. So I'll explain the difference. So what is the purpose of this standard? The purpose of this standard is, that to provide, to guide the auditor in order to provide reasonable assurance. Here the reasonable assurance is important. Okay. Now, what kind of reasonable assurance that we are providing over here? So reasonable assurance or a report, okay, for the use of the user entity and their auditors. So auditors who are following SA 402, okay, for them a report a report to be issued by service organization's auditor. Now what that report contains, that the controls at the service organization that provides a service to the user, okay, that provides a service to the user entities is likely to be relevant for the user entity's internal control. Okay, because we rely upon the controls at the service organization. We have learned that in SA 402. That is for sure. Now, in this report, what we say that, okay, whenever the service organization is responsible or whenever they make an assertion about the suitable design of the control which is there in their organization, service organization, okay, at that particular point in time, this essay will be applicable or we will be issuing report under this heading. That is a type 1 or type 2 report. It is type 1 report is a report on the description and design of the controls. Type 2 report is a description, design and operating effectiveness of the control. However, there are scenarios when this particular essay will not be applicable. That means when if I say I have to issue report only to state that the controls at the service organizations are getting operated as described. Means I'm only reporting on the operative effectiveness of the control, not on the design and description. That is not happening. Because type 1 talks about design and description, type 2 talks about design, description, and operating effectiveness. So if there is an assignment only on the operating effectiveness, that will not form part of this particular assurance engagement. Number 2, issuing report, okay, on the controls, issuing report on the controls that are not relevant for the user entity. Means I am issuing report which is not even type 1, not even type 2, some other report. In that scenario also, this essay will not be applicable. Or for example, I am, as a service organization auditor, I am required to report on the transaction processed by the service organization of the user entity. Okay. In that case also, this standard will not be applicable because I am reporting on transactions, not on control. So type 1, type 2 report is covered. Other than that, nothing is covered. Or if I perform agreed upon procedures, it will not be covered by this particular standard. So those are out of the scope of this standard. I hope now it is clear. Okay. Now, what are the objectives of the auditor here is to obtain reasonable assurance. That is the first thing. Understand. These are the assurance engagements. So we will be issuing or we will be obtaining reasonable assurance. Okay. Whether in all material respect, whether the service organization's description. So in type 1 report, what I'm doing is reporting on the description. So I need to say that, okay, description of the system fairly presents the design and implementation throughout the specified period. Okay. So design and description. I need to obtain reasonable assurance to report on the design and description of the controls. I need to report on the control objectives which are there. Okay. Again, that will be part of your type 1 report. And if there is a type 2 report, then along with the design and the description, I need to report on and provide a reasonable assurance that these controls were operating effectively at the service organization throughout the specified period. Okay. Now for that, again, the requirements are pretty straightforward that are applicable. Means I need to comply with ethical requirements. I need to communicate with those charged with governance. I need to follow, acceptance and continuance procedures, which are pretty much similar on the line of all the essays that we have done till now. Okay. Then you need to obtain agreement, management responsibility, kind of, agree with management, what is their responsibility. So assess, see here, we need to assess whether the descriptions, design, okay, suitable criteria, which is prepared by the management, are appropriate on. We need to consider materiality. We need to understand the systems, business environment, SA 315. We need to understand internal controls. Then we need to apply appropriate procedures, SA 330. We need to gather audit evidence, SA 500. So all these things are applicable. Written representation, subsequent events, whatever we have seen till now, it will be applicable over here. And then on the basis of that, I will be issuing my opinion. Again, when it comes to the opinion, straightforward and pretty simple. First is your TA, that is your title and addressee, and the title should contain Independent Service Auditor's Assurance Report. The term independent should be there. Then identification of the description of the systems of the service organization. Remember, design and the description. So first part is you need to identify description. Then you need to identify the controls objectives. Then you need to statement that that the report is on the we have tested the controls if there is a type 2 report, because in type 2 report you kind of provide operating effectiveness of the control throughout the specified period, and to test the operating effectiveness you need to perform some procedures. So in case of a type 2 report you talk about test of controls, TOC. Then statement regarding responsibility of the service organization, kind of a management responsibility you can say. Statement regarding service auditor's responsibility, kind of auditor's responsibility you can say. Statement of performance of engagement in accordance with SAE 30402, means reference for SAE. Summary of the procedures that you have performed. Limitations of controls in case of type 2 report, okay, because you are talking about operative effectiveness. And issuing of opinion, like on the type 1 type 2 report, the kind of opinion that is there, and that is DSP, that is a date, place and signature, or date, signature and place. Clear? So if you want to summarize in a shorter way, it would be TA, DCT, MRAR, reference, limitations, opinion, and then DSP. Clear? Any doubt? Any doubt? Any doubt, Munish? Abrakesh? No? Okay. If no further doubts, that was a pretty straightforward SAE when it comes to the 3402, because it's the complementary version of the SA 402. Now let's go to the next SAE rather, that is 3402. And this is on the report on the compilation of pro forma financial information included in prospectus. Now this is very specific one. Okay, that talks about that assurance engagement which are undertaken by a practitioner to report on the pro forma financial information. Okay, which is included in the prospectus, means they are done in line with the securities laws, ICDR regulation, LODR regulations. Okay, so in that case, this particular engagement and this particular SAE will be applicable. Now we need to understand the scope over here. If I'm preparing, okay, if the management is preparing pro forma financial information, or if the management is compiling that performer financial information but not including in prospectus. Okay, compilation is there, but it is not being included in prospectus. In this case, in that case, this SAE will not be applicable. So it has to be compilation of pro forma financial information, which is to be included in prospectus. Otherwise, it will not be applicable. This SAE will not be applicable. Here, the term we use is a practitioner. Okay, he could be an auditor, he could not be, but we use the term practitioner, not the auditor. Now, here the practitioner doesn't have the responsibility to compile. He is just issuing the report on the compilation that is performed by the management. So, responsibility of the compilation lies with the management. Now, what is a compilation? Can anyone tell me? What do you mean by compilation? What do you mean by compilation over here? Can anyone tell me what is compilation? Munish, Abrakesh, what do you mean by compilation? Logical aggregation. Okay. Anything else? What do you mean by compilation? Anyone? Compilation. Because that is a very important part. Understanding the compilation is very important part over here. Now, okay. Summarizing as per objective. Kind of, but not in detail. Okay, I'll tell you what is the compilation means. When it comes to the compilation in this particular essay, it means not only, gathering, summarizing, or presenting information, but gathering, summarizing, classifying information, and presenting financial information in a way that illustrates the impact of significant event. Means I want to provide impact of significant event. I want to provide impact of significant event or transaction basically on what? On unadjusted financial information like as if the event had occurred, at the selected date or previous date. That means that I provide impact of significant event by assuming, let's say, what would be the impact if that event occurred on this particular date in past. Now, these impact of significant events are known as a pro forma adjustments. So you make pro forma adjustments. Once I make a pro forma adjustment to the unadjusted financial information, I get pro forma financial information. So once I do the adjustments, then it becomes pro forma financial information. Any doubt? So compilation means that whole process. This whole process is compilation. This whole process is compilation, like providing impact on the unadjusted financial information as if the event had occurred at the previous date. Okay, process is known as compilation. Any doubt till now? Any doubt? Okay. Now, again, the requirements usually remain same. That is, before accepting such engagement, we need to check about the acceptance and continuance. We need to check, whether we can accept the engagement. So I will apply similar concepts of SA 210 and 220 when it comes to acceptance and continuance. I will assess suitability of the criteria. Over there in the audit, I assess suitability of the financial reporting framework. I will consider materiality, SA 320, obtain evidence about the calculations, SA 500, understanding of compilation information, your 315, then obtain evidence about the appropriateness of pro forma adjustment, again your 500, evaluate presentation, and understand the misstatement. So you can say 500 plus 450, written representations 580, conclude whether sufficient and appropriate audit evidence about the compilation is available. So you are evaluating again SA 450, and then you need to form an opinion based on 700. So I'm applying all these things, all the available information, or the concept that we have learned in the audit in a bit tweaked way, in a bit changed way in this particular startup. So acceptance, continuance, evidence, analysis, everything is on the similar line that we already have learned earlier. So there is not anything new that we are learning over here, except for the purpose and the subject matter. If you talk about procedures, they are on the similar lines that what you have seen, but only tweaked for the subject matter. Means I will collect evidence to ensure that the pro forma financial information provide true and fair view. I will collect evidence about the compilation. I will collect evidence about the pro forma adjustments. So I will be changing a procedure a bit, but the base and understanding of the procedure, or the logic will remain the same that you have already learned. So here also, either you can express an unmodified opinion. Okay. You can issue an unmodified opinion. Then you can think of, okay, what is the requirement, legal requirement in this particular scenario, law or legal requirement. What is the requirement from withdrawing the engagement if you are not able to get the appropriate audit evidence, or sorry, appropriate evidence in this scenario? What is the requirement with respect to the modified opinion? Can you issue modified opinion on such kind of reports? Can you include emphasis of matter paragraph or some other, explanatory notes or something like that? So again, you need to understand the law and regulation because it is required. It is going to be included in the prospectus. So securities laws is applicable. And we need to evaluate such laws for reporting purpose or for reporting requirement. And then you need to issue the report. What is the report basically? Again, pretty much similar. Title and addressee, then your introduction paragraph, then statement that the responsible party is responsible, kind of management representation, then description of practitioner responsibility, kind of auditor's responsibility, reference to essay, statement to provide reasonable basis for the presentation, okay, and directly attributable to the events or transactions to obtain sufficient appropriate audit evidence. So you can say about the procedures performed. Then it comes the opinion, and you have a date, signature, and place. Simple. If I have to summarize, TAI, that is the introduction that will be there. Then MRAR. Then you have a reference, procedure, opinion, and you have then DSP. Clear? Any doubt? That was about your assurance engagement to report on the compilation of pro forma financial information. Any doubt? No? Okay, if no doubt, then let's take some questions on this particular topic. Technova Solutions, a leading technology company listed on a stock exchange, is in process of securing a substantial loan from a consortium of banks to fund a major expansion project. As a part of the loan application, Technova has prepared 5 years financial projection, incorporating both best estimate and hypothetical assumptions to demonstrate the project's financial viability and the company's viability to repay the loan. Fine. The banks have appointed ABC and Associates Chartered Accountant firm to conduct examination of Technova's prospective financial information in accordance with SAE 3400. And during the examination, ABC encountered the following scenarios. Technova's best estimate assumption for revenue growth are based on ambitious market penetration strategy and a favorable regulatory environment. However, the auditor notes that the assumptions do not fully consider the impact of emerging competitors and recent regulatory changes that could adversely affect the company's growth prospects. Financial position of Technova's financial position include a hypothetical scenario where the company secures a significant government contract, resulting in a substantial increase in revenue. While this scenario aligns with the company's strategic objective, the auditor finds that the assumptions regarding the contract award and its financial impact are overly optimistic and lack sufficient supporting evidence. In the light of above scenario, discuss the auditor's responsibility in evaluating the reasonableness of Technova's best estimate assumption and the consistency of the hypothetical assumption with the purpose of financial projection. So, what is the auditor's responsibility in this scenario? Let's go one by one. Let's go with the first best estimate assumption. So, what is the auditor's responsibility? Just now we have discussed in a summarized way. So, what is the auditor's responsibility, guys? Come on. What is the auditor's responsibility in this scenario? Abrakesh. Munish. What is the auditor's responsibility when it comes to the best estimate assumption? And if auditor thinks that the assumptions do not fully consider the potential impact of the emerging competitors, then what auditor should do? Simple. What auditor should do in that scenario? Okay. See, it's pretty much simple and straightforward. When I talk about best estimate assumption, they are based on the underlying data, methodologies, okay, and some calculations. Now, when it comes to best estimate assumptions, if auditor feels something is not appropriate, he needs to go and check the underlying data of the assumptions, methodologies used to make the assumptions, source of information used to develop that assumption. Okay. If auditor feels that the assumptions are not appropriate, he can say that the particular information, prospective financial information, PFI, contains or are not based on the assumptions which are reasonable. So basically he can conclude that the prospective financial information contains certain assumptions which are unreasonable. So I will first identify the underlying data, methodologies, source of information, and on the basis of that, I will comment in my opinion. Any doubt? Any doubt? Okay. Now, what about the hypothetical assumption? If you think the hypothetical assumptions which are over here are overly optimistic and lack sufficient appropriate evidence, so what is the auditor's responsibility with respect to that? What is the responsibility here of the auditor with respect to the hypothetical assumptions, guys? I'm not talking about best estimate, okay, assumptions, but I'm talking about hypothetical assumptions. Okay. Anyone else? So in case of hypothetical assumption, the auditor's focus should be on the evaluating the consistency of these assumptions with the purpose of the financial projection. For example, if the purpose of financial projection basically over here is okay to demonstrate the project's financial viability and the company's ability to repay the loan, then I need to make assumptions on that particular line. Okay. So if I have, the purpose here is to demonstrate project's viability. Now, what is the project over here? The project is the major expansion project for which the loan is taken. Now, if my in case of hypothetical assumption, if the scenario or the assumption which is made is not as per the purpose, is not relevant to the purpose, or even not consistent with the purpose, in that case, I need to consider the impact on the opinion of that particular this misalignment kind of thing. For example, in this case, what auditor needs to do? The auditor should consider whether the hypothetical assumptions are a bit realistic or overly optimistic. When it becomes overly optimistic, means there are very less chances, or there is a very less probability, like a negligible probability of achieving that results. In that case, they defeat the purpose of the projection. Projection is to disclose the viability. If I take assumptions which are unreasonable, very less probability one, like the probability is near to zero, and if I incorporate those assumptions, means I am not incorporating assumptions which are aligned to the purpose. These kind of assumptions will not give me any comfort on the project's viability. So they are not aligned with the purpose of the financial projection. As a result, I need to understand whether alignment is there or not. If there is no alignment, then consider the impact on the opinion. Now, here the second question in this particular case scenario even is that what procedures should ABC and associate perform to gather sufficient and appropriate evidence to support their conclusion regarding the assumptions used in Technova financial projection. So let's say if these two assumptions are there, the best estimate assumption and the hypothetical assumption. So what evidence, sufficient and appropriate audit evidence, they should gather? So what do you think? What evidence they should gather in this scenario? What they should do, like I'm talking about the procedures they should perform to gather the evidence. So what procedures they should perform? Anyone? Very good. Very good, Abarkesh. Yes. Come on, guys. When it comes to procedures, they are pretty simple. I need to review the internal data and the forecast. I need to review the method, assumptions, and the underlying source data. I need to review the external market research or carry the external market research. For example, analyzing market reports. I may perform sensitivity analysis with respect to the assumption. For example, if I say, sales is 10%, is going to increase 10%. So I will perform sensitivity analysis. Like, if I increase by 1% or decrease by 1%, how much the sale figure or the revenue figure or, the profit figure will change. Then I will discuss with the management. I will perform inquiries with the management, okay, to understand the process of making the assumption, whether it's a hypothetical or best estimate, and accordingly, I will perform the procedures. Any doubt? Any doubt with this one, guys? No? No doubt. I hope you understood the question over here and how we answered the question. It's a direct application of the concept. There is nothing much, difficult or complex over here. Okay. If no further doubts, then let's take a quick 10-minute break. After the break, we'll gather back and continue the session. Let's take a quick 10-minute break. Hello everyone, welcome back. Let's continue the session. So we will solve some more questions on the same topic and then we'll proceed to the next chapter. So let's solve some more questions. So a very good question on this particular topic itself, that is, Greenleaf Ventures, an established agri-business company listed on the Bombay Stock Exchange, is planning a significant diversification into renewable energy. To attract potential investors, Greenleaf has prepared a comprehensive 3-year financial forecast. This forecast projects substantial growth in the revenue and the profitability, driven by favorable government policies and increasing demand for renewable energy. XYZ Associate, a reputable chartered accountancy firm, has been engaged to examine this prospective financial information under SAE 3400. During the review, the XYZ Associate noticed several inconsistencies between Greenleaf's historical financial information and the assumption used in the forecast. That is, the forecast assumes an annual 30% revenue growth, while Greenleaf's historical revenue growth has been average on a 15% over past 5 years. The discrepancy raised concern about the aggressiveness of the forecast growth assumptions. Second, gross profit margin. The forecast projects a consistent gross profit margin of 40%. But Greenleaf's historical gross profit margin has been fluctuated between 30 to 35% due to variation in the raw material cost and pricing pressures. Third, operating expense. The forecast assumes a significant decrease in operating expense as a percentage of revenue. However, the Greenleaf's historical financial information does not indicate any substantial cost-cutting initiatives or efficiency improvement that would support this assumption. In accordance with SAE 3400, discuss how XYZ Associate should evaluate the consistency between the Greenleaf historical financial information and the assumption used in the forecast. So how will you evaluate this particular differences? Like you have a historical financial information and the forecast. But there is a difference between both of them. So what you will do as an auditor, or what you will do when you want to evaluate the reasonableness of the forecast with respect to the historical financial information. Come on, guys. How will you check the differences over here? What is correct, what is not? Very good, Abrakesh. Yes, good. So what will you do over here when it comes to the evaluation of the reasonableness or consistency with the historical financial information? How will you evaluate the consistency? It's pretty simple, straightforward, that we have discussed. So how will you evaluate the consistency between the historical financial information and assumptions used in the forecast? Anyone? No? Okay, I'll tell you. Now here, understand two things. When I want to evaluate consistency, first of all, the base will be the historical financial information for me. Perfectly fine. I have set up a base that, okay, I know what is the revenue increase, what is the gross margin. Okay, so I have a base which is known as a historical yardstick. For me, the base or the historical yardstick will be the historical financial information. Over and above that, if I add some assumptions, for example, the revenue will not be 30%, rather it will be 40%. So for the difference 10, I need to understand the reasonableness of the assumption, whether the assumptions are consistent with the data or information that is available with us. For example, forward-looking conditions of the market, industry trend, regulatory changes, company's competitive business position. So based on all that data, can I conclude that from 30, the revenue increase will increase to 40? Okay, the revenue will jump to 40% increase. I need to understand the reasonableness of the assumption. And then I should gather supporting evidence to support the reasonableness. Supporting evidence kind of, you can say, market research reports, industry analysis, internal budgets, detailed explanation or rationale behind the assumptions, everything. I can gather as an evidence. I'll gather to support the assumptions, and then once I will have a sufficient and appropriate evidence, then only I could say, okay, there could be discrepancies between the historical financial information and the assumptions, but whether those discrepancies or differences are reasonable or not. It is not the scenario that if there is a difference, then it's an issue. No, don't think of that. The difference is an issue unless and until you have a you don't have a reasonableness of the assumption, then you can call it an issue. Otherwise, if you have a reasonableness behind that, if you have a supporting evidence behind that, it's perfectly fine. Any doubt with respect to this? Now, the second question I would ask you, how will you gather supporting sufficient and appropriate audit evidence? What procedures you will perform to gather that that particular evidence? Sufficient and appropriate evidence. So if you have to perform some procedures, to understand the reasonableness of the assumption, to understand or to analyze whether the discrepancy or the differences are reasonable or not, I told you the sources, but what procedures you will perform? Can anyone tell me about the procedures? And again, that is pretty simple. Can anyone tell me on the procedures? Anyone? Okay, very good. Rakesh, yes. Anyone else? Munish? Okay, I'll tell you. When it comes to procedures, it's pretty simple, straightforward. First, I need to do the analytical procedures. Okay. For example, I need to analyze the trend and identify the fluctuations, anomalies that require investigation. So I'll do the analysis. Okay. I'll compare the 30 with 40. I'll go month on month, revenue increase. I'll go, quarter on quarter. So I'll do analytical procedures to understand the anomalies, to understand the significant fluctuations. And anomalies are something, which are insignificant and are not required to be focused upon. So I'll remove the anomalies and I'll focus on the significant fluctuations. And for the significant fluctuations, I will inquire with the management. I will perform interviews, okay, inquiry and discussion with the management. And once I'll do the inquiry and discussion, on the basis of that, I may decide to test few things, either by comparing through external, reports, like external collaboration, like industry experts, market research reports, or something like that. Or I may gather that evidence internally by inspection, observation. So accordingly, I will perform these procedures: analytical review, inquiry, observation, inspection, external collaboration. All these things will help me to gather the evidence I need. Pretty much clear? Any doubt? Any doubt, guys? Okay. Let's proceed to the next question. Again, that is also a good one. They are pretty simple, straightforward. Solar Wave Energy Incorporation, a rapidly growing renewable energy company, is seeking substantial funding from a private equity firm to accelerate its expansion plan. To support their funding proposal, Solar Wave has prepared a 10-year financial projection detailing anticipated revenue growth, profitability, return on investment. The projection includes ambitious target for market penetration, technological advancement, and regulatory changes. The private equity firm has engaged PQR & Company, a leading audit and assurance firm, to conduct an examination of Solar Wave's prospective financial information in accordance with the SAE 3400. During the review, PQR & Company raised the concern about the extended period covered by the projection. So that is, the renewable energy sector is characterized by rapid technological advancement. The auditor questions the reliability of the Solar Wave's assumption regarding the technological breakthroughs and the cost reduction over a 10-year horizon. So the assumptions here are pertaining to the 10 years. Government policies, regulations plays a crucial role in the renewable energy sector. The auditor is skeptical about Solar Wave's ability to accurately predict regulatory changes and their impact on the company's financial performance over such long period. That is a 10-year. So predicting regulatory changes over 10 years. The renewable energy market is subject to significant fluctuation in demand, pricing, and competition. Auditor expressed concerns or reservations about the accuracy of Solar Wave's market forecast, particularly over extended time frame, that is of a 10 years. So discuss how PQR and company should address the concern regarding the length of period covered by the Solar Wave financial projection in accordance with SAE 3400. So what is the problem over here when it comes to the period covered by the Solar Wave financial projection? Can anyone tell me the concerns over here? Like what should be the concern over here when it comes to the financial projection that has been prepared by the Solar Wave company? Very good, Abrakesh. It is too long. Okay. But is that a concern? Or that should be, or is that an observation? Should I call this as an observation? That the period is too long, that is a 10 years. What do you say? Should I call this particular 10-year period, extended period, as an observation? Yes, no. If I call this as a concern, then what should I do? If I don't call as an observation, or if I call this as a concern, what should be the next steps? Can anyone tell me that? So I'm breaking up the question for you guys. The question is that how auditor should address, okay, PQR and company should address. So the first question like to address is, should, like, if this is the qualification or the observation that I need to report in my report, If yes, then how should I report? Number two, if that is not an observation, then what procedures should I perform to address this concern? What should I do to address this concern? And it is a pretty straightforward and simple answer. That is, we have already seen this answer before or discussed this topic before. Anyone? Very good, Abhishek. Yes, absolutely correct. Anyone else? No? Okay, I'll tell you. First of all, if there is something different, okay, if you have an assumption, you need to understand whether that assumption is reasonable or not. Although it is at over 10-year horizon, you have a concerns, but still you need to understand whether these concerns are genuine, or is there any information or details available behind these concerns. Now, for example, technological evaluation. Okay. Now, the renewable energy sector is characterized by rapid technological advancement, and they have made a assumption that there will be a technological breakthrough and cost reductions over a 10-year horizon. Now, there could be or there could not. So, what is the basic data, information behind that assumption? That is something we need to understand. Okay. So, I need to first assess the basis for the assumption. Why the company is saying that there will be technological breakthroughs and cost reductions. Why the company is saying that? What is the data behind it? What is the information that they are using? Market volatility, for example. So company is saying, so basically the market is that subject to significant fluctuations of demand, pricing, and competition. Now, SolarWave is saying that, they have expressed reservation about so the auditor has expressed reservation about the accuracy of the SolarWave's market forecast. If the company has made some market forecast, what is the basis, information, and assumption behind those forecasts? Now, it is a forecast, not a projection. So forecast should be based on some information, detail behind it. So what is that? Are any method used in making those forecasts? If yes, then what is that method? What that method says? So assessing the basis for the assumption, where the auditor or the PQR and company should carefully evaluate the basis of SolarWave's assumption for the 10 years projection. They should inquire about the methodologies that is being used, data source that has been utilized, and experts' opinion that has been taken to develop the assumptions. The auditor should assess whether these assumptions are supported by sufficient evidence or not. Do I have the evidence in hand to support the technological breakthrough, cost reductions, market forecast? Do I have that thing in my hand? Yes or no? If yes, then what is that? I will perform sensitivity analysis to check the sensitivity of the assumptions, and accordingly, I will conclude whether they are reasonable or unreasonable. And for that, I may need to review internal forecast, internal budgets, external, information, current market conditions, future plans. I may need to check industry trends, technological advancements, competitor activities, or what competitor even thinks with their if they have some projections with them. Where I may appoint an expert. So there is no restriction on appointing an expert. I may appoint an expert to obtain his opinion. So accordingly, all these things I can do that. Any doubt about this particular question? Pretty straightforward. Any doubt? So let's say in this question itself, I'll ask one more question to you guys. That when I'm going to decide or determine the nature, timing, and extent of my examination procedures, the procedures just now we discussed. What are the matters that the audit that the PQR and company should consider? If I want to decide the nature, timing, and extent of my procedures, like inquiry, investigation, appointing expert, so which matters or which are the key areas that I should consider before determining the nature, timing, or extent of the examination procedures? So, on what basis, okay, I should decide my nature, timing, and extent of audit procedures or the examination procedures rather? So what are those particular, matters on which or on basis of which I should determine the nature, timing, and extent of examination procedures? Can anyone tell me answer of that? How much time I need to invest? How much time I need to devote in performing these procedures? How should I plan it? So what should be what matters I should consider for that? Very good, Abhikesh. Yes. What else? Come on, guys. What else? Very good. Yes. Good, Abhikesh. Anything else you will consider? Anyone? Very good. Yes, Abhikesh. So I'll give some examples on that. First one, what knowledge the auditor or the PQR and company possess, okay, uh, or they have obtained during any previous engagement about the company, its business, about the entity and its environment, including internal controls. So the level of knowledge obtained or they possess as on the date. Second, the competency of the management regarding the preparation of prospective financial information. Is management competent enough to prepare such kind of information? So that gives me some comfort, or whether if management is not competent enough, then it is an issue for me, and I need to draft my procedures accordingly. The likelihood of misstatement. This is directly linked with the biasness of the management or biased judgments. So when I talk about misstatements, means the assumptions are unreasonable. So I need to understand the likelihood of unreasonableness of the assumptions. Again, biasness of the management judgment is another area that I will consider. Then source of the information and how much reliable the source is. Adequacy, reliability, okay, integrity of the particular data that is used for the assumption. stability of the business, how much stable the business is. And when I talk about stability means, let's say it is a startup started 6 months ago. Can it predict the next 10 years? Answer will be very difficult. So a 6 month old startup cannot predict appropriately for its upcoming 10 years. But when I talk about a 30-year or 50-year or a 100-year-old company, they can easily predict, or they can, they will have that data information, something available to at least predict or to make a forecast for next 10 years. So stability of the entity's business. For example, it could be, industry related also. For example, company manufacturing tobacco related products, or on the other hand, company manufacturing steel, iron, aluminum related products. So what is a stable business they have? And the engagement team's experience, whether they have performed any such engagement before in past in any such industry. So all these are the factors on which I have to base the nature, timing, and extent of the examination procedures. Any doubts till now? Any doubt? Any doubt? No? Okay, let's proceed to the next question. Data Fortress Incorporation, a leading provider of cloud-based data storage and management services to a wide range of clients, including financial institutions, healthcare providers, and government agencies. To assure its clients of the security and the reliability of the service, Data Fortress engaged an independent service auditor, Secure Audit LLP, to conduct an examination of internal controls over financial reporting under SAE 3402. Okay. Now, during the planning phase of the audit, Secure Audit LLP discovered that the Data Fortress had developed its own internal control framework, which differs significantly from established industry standards such as COVID or ISO. Data Fortress claims that its framework is specifically tailored to the unique nature of this cloud space service and provides a more comprehensive and effective approach to manage the risk. Secure Audit has concern about the suitability of the Data Fortress internal control framework, particularly regarding the completeness, alignment with the objectives, and benchmarking. Okay. Now here, when I talk about the completeness, that is the auditor's question whether the Data Fortress framework adequately addressed all the relevant risk and controls. When I talk about alignment with the objective, it's talk about auditor is unsure whether the Data Fortress framework is aligned with its stated business objectives. And third one is the benchmarking. Auditor notes that the Data Fortress framework lacks a clear benchmark against industry recognized standards. Okay. Now, in accordance with SAE 3402, discuss how Secure Audit LLP should assess the suitability of the Data Fortress internal control framework. Now, this is related to SAE 3402. When I'm evaluating the design and description of the system, implemented throughout the specified period, I need to consider with a specific subject matter. I need to consider in relation to a specific subject matter, the design and the description. So, from that point of view, you need to assess the suitability of the Data Fortress internal control framework. It's on the criteria that is required to be applied. Understand the criteria that is required to be applied. So here you need to discuss how the auditor, service auditor, should assess the suitability of the framework or the criteria. So it is for their clients. It's not on the only operative effectiveness. It is to assess the suitability of the criteria. So SAE 3402 will be applicable. Assessing the suitability of the criteria. How? Can anyone tell me on this part? You need to assess the suitability of the criteria. So it's pretty straightforward. It might be appearing, a detailed, complex one, but if you want to assess the suitability of the criteria, it's pretty much simple. That service auditor is required, okay, to assess the suitability of criteria by, uh, you know, by understanding that uh, what is a type of service that is provided or type of transactions which are processed. Okay, what is the information technology or IT technology used? How much manual systems are there? Okay, related records, processes, description of the processes, control objectives, okay, and then aspects related to the control environment, risk assessment procedures, all these things. So you need to understand that particular part of the criteria and internal control framework that is being applied in the case, and accordingly you can decide whether the internal control framework or the suitable criteria is appropriate or not. So let's say, for example, completeness related issue. So in that case, what you need to do is you need to understand the suitable criteria over here is complete, whether that considers all the aspects of the relevant risk and control, whether the suitable criteria, okay, and is aligned with the business objective or specific needs of the client. Accordingly, it is decided in this case whether the criteria that is suitable or not. So the service auditor is required to assess whether the service organization has used suitable criteria in preparing the description of the systems, in evaluating whether the control are suitably designed, and in case of a type 2 report, evaluating whether the controls are operating effectively or not. So type of a control framework basically, like COBIT, COSO, ISO. So what type of framework they have used and whether that framework is appropriate or not. Clear? So understand the framework, perform risk assessment, perform control design assessment. What are the control objectives, and what are the reviewing or monitoring processes? Based on that, you can decide whether it is suitable or not. Simple, straightforward. Any doubt till now? Any doubt? Okay, tell me, once you perform the suitability analysis of the criteria, okay, what is the next step? What are the next steps then which are required to be performed? Pretty straightforward and simple. Once you have performed the suitability of the criteria, assessment of the suitability of the criteria, what are the next steps that are required to be performed, okay, for this type of engagement? So I have done suitability of the criteria assessment. I have, done the acceptance and change in terms of engagement, acceptance of continuance, compliance with the ethical requirements, communication with the those charged with governance. That is done. Now what? Trust me, it is straightforward answer. What will be the next procedures that I need to perform for this engagement? I need to issue the report, type 1 or type 2 report. For that, the assessment of the suitability of the criteria is done. Some initial procedures like pre-planning procedures are also done. What is the next step that I will perform? Anyone? No? Okay. Basically, when it talks about next steps, I will determine the materiality. I will obtain understanding of the service organization system. I will obtain evidence regarding the description of the controls. I will obtain evidence regarding the design of the controls and design effectiveness of the controls. I will understand the operating effectiveness of the control if there is a type 2 report. Then understanding the internal audit function and any activities performed by the internal audit function in order to determine whether these controls were operating effectively or designed effectively. I may ask written representations. So I will apply other essays. So I have applied essay 200, 210 till now or 220 till now. I will apply other essay relevant to this particular scenario like 320, 315, 330, 500, 450, 580. The logic of those essays I will apply and I will perform the subsequent procedures. And then the last one is the reporting. I will prepare the report. Either it will be a type 1 report or type 2 report. Clear? Any doubt till now on this particular part? Any doubt, guys? Pretty straightforward. There is nothing difficult on that particular part. Okay. Let's take one more question and then we'll shift to the next chapter. AAA Industries Limited is a publicly traded company planning a significant acquisition of Beta Corp, a privately held entity. As a part of acquisition, AAA has prepared a pro forma financial information to illustrate the potential financial impact of the transaction on the combined entity. This pro forma information has been included in the prospectus for the new shares issuance intended to finance the acquisition. So they have made a pro forma adjustment on the unadjusted financial information to create a pro forma financial information, which is included in the prospectus. So everything is being satisfied for SA 3420. SA 3420. ACME has engaged MNO and Associate, a chartered accountancy firm, to report on the compilation of pro forma financial information in accordance with SAE 3402. During the review, MNO and Associates discovered that the unadjusted financial information of Beta Corp, which is formed the basis for the pro forma for adjustment, was previously audited by another firm, that is a DEF and Company. And DEF and company's audit report on the Beta Corp financial statements included a qualified opinion due to a material uncertainty related to the going on related to a litigation. Furthermore, ACME's own audited financial statement, which are also a source of the pro forma financial adjustments, contains an emphasis of meta paragraph highlighting the significant subsequent event related to major customer bankruptcy. So there is one qualification in the subsidiary or the company which is going to be, merge in this one, and emphasis of meta paragraph highlighting major customer bankruptcy. Now the question is, in the light of modified opinion on the Beta Corp's financial statement, the emphasis of meta paragraph in ACME's financial statement discussed the consideration and action of MNO and associate that they should undertake in accordance with SAE 3420. So now the basis of the pro forma financial information, okay, over here is the audited financial information on which there is a qualified opinion. How will you deal with this scenario? How will you deal with this scenario? Come on, guys, quickly. How will you deal with this scenario? So the company which is going to get acquired has a modified opinion. The company which is acquiring has a emphasis on meta paragraph. These two informations are going to be base for the pro forma financial information, and then this is going to be, issued for the purpose of prospectus or issued with the prospectus. As a result, what should be the steps the auditor should be taking okay, in this scenario? And we have discussed this part. We have discussed this part. What should be the responsibility of the auditor, or what auditor should do when they identify that there is a qualified opinion, there is an emphasis of meta paragraph in the audit report of the financial statement which are used as a pro forma, or which are used as a base or the unadjusted financial statements. Okay, Rakesh. Anyone else? Anyone else? Okay. Now, understand one thing. If this is, with respect to the prospectus, so securities laws are applicable. If you want to refer to an observation or modified opinion on the base data that has been used, or if you want to highlight emphasis of meta paragraph, in that case the auditor, or the rather here the term which is used as a practitioner, okay, the practitioner has to consider whether the relevant law or regulation permits the use of the reference in the practitioner's report to the modified opinion or review, or review conclusion or reporting, containing the emphasis of meta paragraph with respect to such sources. Means, can I include the emphasis of meta paragraph reference or modified opinion reference in the practitioner or in my report when I will issue the report on the compiled pro forma financial information? If yes, then I should do that. If no, then I need to understand what are the responsibilities of the practitioner in this scenario, whether he can withdraw or not. If he cannot withdraw, if he cannot include, then I need to seek legal advice. So for that, I need to understand what are the legal requirements, relevant laws, regulations, and the permissions which are there to use the reference of the modified opinion and the emphasis of meta paragraph. Furthermore, furthermore, if I think, okay, the prospectus or, the pro forma financial information, compile the pro forma financial information contains some misstatement for which I need to issue a modified opinion. Okay, in that case, I need to understand whether I can issue the modified opinion and what should be the wordings. If the responsible party or the management here does not agree to change, if they agree to change, then there is not an issue. If they do not agree to change, then I need to understand what should I do, whether I'm allowed to issue a modified opinion. If yes, then I'll issue a modified opinion. If I'm not allowed to issue modified opinion, can I withdraw? Yes, I'll withdraw. If I cannot withdraw, cannot issue a modified opinion, but there is a misstatement which is not being rectified by the management or responsible party, I need to seek legal advice. Understood? Any doubts till now? Any doubt? Okay. If no further doubts, let me take up next chapter, chapter number 12. Okay. Now, for chapter 12, what I suggest over here is that we will go question by question. Okay. We will discuss the questions and then discuss the summary of the chapter with the questions. Okay. So we'll discuss questions, then the summary. We'll discuss questions, then the summary of the topic. Question and the summary of the topic. So that we have a link on the chapter. Now, but before I proceed to the summary questions, I'll just provide a brief introduction to the chapter. Chapter number 12 talks about digital auditing and assurance. Okay. Basically, in this chapter, it is about the how digital audit is required to be done, benefits and the key feature of the digital audit. On the other hand, we have auditing digitally, the tools and technologies that can be used for auditing digitally, the impact of new and upcoming technology on your audit, okay, on the audit environment, audit procedures, okay, cybersecurity risk. It is, how to mitigate the cybersecurity risk, cybersecurity framework, okay, what should be the control objectives, IT control environment, how IT audit is required to be performed. So all these scenarios are there, and then we have a very interesting topic about the remote audit. So let's start with the question, and then we'll deep dive, and then we will discuss the particular summarize the particular topic related to that. Okay, so the first question. Traditional Textiles Limited, a legacy textile manufacturer with a history of spanning over 50 years, has recently embarked on a digital transformation journey. TTL has implemented an enterprise resource planning system to integrate its various business processes from procurement to production to sales. Everything. The company has also invested in data analytics tools to gain insight into customer behavior, supply chain, production optimization. However, TTL's audit committee is concerned about the potential risks associated with the company's digital transformation. They are worried about the data security breach, system failures, potential for human errors in operating new technology. And the committee has requested ABC and Associate, a chartered accountancy firm with expertise in the digital audit, to conduct a comprehensive digital audit of the TTL's operation. Okay. Now, discuss how ABC and Associate can address challenges faced by the TTL in its digital transformation journey. Now, first of all, once before we go to the challenges that are there, okay, can anyone tell me what are the basic advantages of the digital audit? Can anyone tell me the advantages of digital audit? We'll go to the challenges in a while, but before that, can anyone tell me about the advantages? Pretty easy. Advantages of digital audit. Straightforward. Yes, Abhirakesh. Anyone? Okay. Yes, very good, Abhirakesh. Yes. So when I talk about advantages of digital audit, basically it is the enhanced efficiency and effectiveness of the audit. Because I'm auditing digitally, okay, during the digital audit with the use of tools and automation techniques. Then better quality of audit I perform better quality of audit because I analyze volumes of data. I do not do sample testing, but I do more data analytics. I analyze the data volume. Lower cost because I can perform analytics, I can perform reviews quickly with the help of tools. Again, better analytics, better outcomes. Okay, improved risk assessment because based on the analytics, I can perform the improved risk assessment. Now, these are certain advantages of the digital audit. Now, let's understand the issues over here, the challenges, and then we will see how to overcome or what are the considerations for respect to the challenges on the digital audit. So, first challenge is resistance to the change. Some employees, particularly those with long tenures, are resisting to the change and electing to embrace the new digital tools. Data quality issues. The data migrated from legacy systems to the new ERP contains inconsistencies and errors. Lack of digital skills. Some employees lack the necessary digital skills to operate effectively the new tools. Okay. And then you need to discuss how ABC and company or how ABC and associate can address the challenges faced by TTL in its digital transformation. So what auditors should do in this scenario? So what basically auditors should do to understand the challenges and to perform digital audit? Come on, guys. Hmm. So basically, when it comes to the challenges and consideration of the challenges, okay, in the digital audit, as an auditor, we need to obtain an understanding of the management implementation and oversight of new technologies. There could be resistance to the change, that is for sure. But we need to understand what business benefits, uh, what business benefits the organization want to achieve from this automation. Okay, so the benefit versus the resistance analysis, that is something required to be done. In case of data quality issue, whether the right processes are targeted for the automation, whether the processes are standardized before the automation to avoid the data quality issue. Okay, then they need to understand the changes of the company's business, okay, including changing to the IT environment. Now, for example, if there's a data quality issue, so what is the change that is being brought into, okay, for which there is a data quality issue? Like if new ERP is there and the migration is causing the issue, understand the migration process, understand the quality issues over here. Lack of digital skills. Okay. So understanding the lack of digital skill means here we need to understand that automation is not a standalone solution. It is a broader broader part or this broader component of the strategy of the digitalization. Okay, and as a result, which processes are there where there is a lack of necessary digital skills, and accordingly auditor needs to focus on those areas. So skill gaps among the TTL employees, what are the gaps? They need to identify the gaps and understand the impact of the gaps. Clear? Any doubt? Okay. Now, another question of the same part is, what specific digital audit procedures should ABC and Associate perform to assess the effectiveness of TTL's internal control in the digital environment? Basically, understanding what procedures should be performed to assess and understand the IT environment over here or the digital environment. What procedures should be performed to assess and understand the digital or the IT environment? Pretty straightforward. You have done before also. Come on, guys. Pretty straightforward. Understanding the IT environment. If I summarize, how will you understand the IT environment? Anyone? Okay. Good about Krish. What else? Understanding the IT environment. Come on, guys. Anyone? Understanding the IT environment. How will you understand the IT environment? It's basic. We have already dealt the same in SA 315. Understanding the entity in its control. When we want to understand the entity, we need to understand the IT environment also. We have also seen in SA 315. So here, understanding the ways in which the company or the entity is using or relying upon the IT environment, how IT environment is set upon to support the business. Okay, like how business is using the IT environment, controls around the IT environment, understanding the controls around the IT environment. For example, the applications that are being used by the business, ERP tools or whatever digital tools that are being used. Details of IT infrastructure component of each application, server side components, your network components, security components, and different IT infrastructure which is there, including hardware also. Organizational structure and governance. How organizational structure, governance within the organization supports the IT environment. For example, simple example, do you have a chief information officer or chief IT officer in the company? Chief technology officer, CTO. Today's, in today's time, we call it chief technology officer. Whether there is a chief technological officer in the company, is there any IT governance, IT audit department in the company? So how the organizational structure is supporting the IT environment, the policies, procedures, processes that are set up for the IT environment, in extent of the IT integration in the day in, day out operations of the company, IT risk, IT controls, IT risk assessment that is performed. So all these things are necessary to understand the effectiveness of the internal control in the digital environment. So understand the flow of the transaction, from where the transaction is starting and where it is going. Okay. For example, if there is a change in the flow of the transaction, if there is a migration, new system implementation, then how the flow is changing. What are the databases involved in the transactions? Where the database is, situated? What data is being saved in the database? What are the temporary data? What are the permanent data? Identification of the significant systems, critical systems which are necessary for the day-to-day operations. If one of the system crashes, the company may face a huge issues. We do a disaster recovery program, business continuity program assessments. Identification of the manual and automated control around the IT systems. An entity can use a mix of automated and manual control, or even IT dependent controls, IT dependent manual controls. In that case, we need to understand what are those controls. ITGC, in information technology general controls, ITGC set up around the IT environment. We need to understand and assess the impact of that. So for example, certain companies will be using certain extraordinary technologies like blockchain, robotics, artificial intelligence, Internet of Things, biometrics. Okay, in that case, you need to understand those technologies, the impact of the technologies on to financial reporting process, onto day-to-day financial reporting transactions. And accordingly, you need to understand, okay, and you need to assess the effectiveness of the internal controls in digital environment. Any doubt? Any doubt, guys? Okay, if no doubts, let's proceed to the next question. Quantum Financial Service is a rapidly growing fintech company that has heavily invested in cutting-edge technologies like robotic process automation, artificial intelligence, blockchain to streamline operations and enhance customer experience. Recognizing the unique challenges and opportunities presented by these technologies, QFS has engaged the audit firm Digital Assurance and Company to conduct a comprehensive audit of their financial statement and internal controls. During the initial audit planning phase, Digital Assurance and Company realized that their team possesses limited expertise in emerging technologies like RPA, AI, or blockchain. While they have expertise in traditional audit techniques and data analytics tools, they lack specialized knowledge required to effectively assess the risk and controls associated with these advanced technologies. So, first question is, in the light of increase of use of emerging technologies in business like QFS, discuss the importance of involving expert in different software application and technologies in audit team as per the guide, as per the SA 315 or as per the requirement. Second thing is, what are the risks arising from the use of IT technology? So first understand the risk and then we understand the need of expert. So first question, let's take up the risk arising from use of IT. Can anyone tell me the risk and risk which are associated with these advanced technologies? What are the risks that are associated with these advanced technologies? Abrakesh, can you explain the term? So the risk arising from use of IT or the risk associated with these advanced technologies. Anyone? Yes, very good, Abrakesh. Can anyone explain? The risk arising from use of IT technology. Okay, I'll tell you. So when it comes to the risk arising or associated with these advanced technologies, one is the unauthorized access, the critical of all. Okay, because if there is an unauthorized access to the data, that may result in destruction of the data, improper changes to the data, including recording of unauthorized or non-existing transactions. It may impact the integrity of the data, inaccurate recording of transactions. Okay, so unauthorized access is a very big issue or very big risk. Then gaining access privileges means, access privileges means that a person has a right to grant access to anyone. Those are the access privileges. Or the person gets the right to access the system, kind of unauthorized access. So gaining access privilege is another, issue. Unauthorized changes to the data. So if there was, technology, if, for example, RPA, okay, robotic process automation, they are based on scripts. They are based on coding. Okay. Now, if any person has an access to the coding, they can do unauthorized changes to that particular logic or the coding or the script that could result in disaster. Failure to make updates. So, for example, there is a security update, required for a particular system, but the update was not done. So, system is still running on the outdated software. Inappropriate manual intervention. For example, if there is a manual control, okay, with around some IT systems or IT database, and the manual intervention or manual control is not being performed, that is in risk. Then you have a data loss or data corruption. Then you have a risk of system downtime. Okay, system is down, it's not working because of the cyber attack, power outage, or XYZ. Network connectivity, system integration, and system compatibility. So a lot of companies are now focusing on involving multiple systems. Now, if there are, involvement of multiple systems, in that case, what happens is that, compatibility issue arises. For example, a simple hypothetical example. Okay, if I'm running old Windows 98 or Windows XP, and if I want to try to install new ERP on that, it will not work because of the integration issue, because of the compatibility issue. As a result, when more than one systems are being integrated, there is an issue or risk of compatibility. Even certain systems get outdated quickly compared to other systems. And if one system gets outdated, okay, is not updated on timely basis, at a later point in stage, there could be compatibility issues. As a result, hardware compatibility, software compatibility, okay, OS compatibility, these issues can arise at a later point in time, and that they could possess a risk. Are you getting my point? So these are the risks associated with the use of IT technology or digital advanced technologies. Now, when it comes to the involving expert, okay, what are the conditions or what are the scenarios that should be, or what are the matters that should be considered while involving the expert? If I want to involve the expert, what should I consider before involving the expert? Come on, guys. I want to involve the expert, but before involving, what should I consider? Very good, Abrakesh. Okay, so before involving the expert, what I need to understand is the capability of the team, competency of the team. If the team needs any expert, so competency of the expert, the area of the expertise. Okay, for example, IT specialist, cybersecurity specialist. So I will consider the area of the specialist. Okay, and his competency, his independence. Okay, whether he is certified or not, whether what are the background. So same that I may apply for appointing an expert, audit expert. Okay, so it is the same that I need to apply over here, the same concepts. There is nothing different here. Are you getting my point? So when I want to apply expert, or when I want to appoint expert, I should consider all the same things that we saw that we see for audit expert. Any doubt? Any doubt till now on this part? No, no doubt. Okay, let us take one more question on the similar topic. EMI, that is Exceler Manufacturing Incorporation, is a large manufacturing company that has recently undergone a significant digital transformation. The company has implemented new cloud-based ERP systems, automated several production processes using robotics, and adopted advanced data analytics to optimize its supply chain. EMI's audit committee and statutory audit has traditionally relied on manual audit procedures, which have become increasingly time-consuming and inefficient in the company's new digital environment. The statutory auditor are considering transitioning to the digital audit approach, but are uncertain about the potential benefits and the challenges associated with such a shift. Based on this, provide key features and advantage of auditing digitally and discuss how digital audit could benefit treasury auditors in the current digital landscape. So you need to provide advantages of auditing digitally. Pretty simple, straightforward. Advantages of auditing digitally. Anyone? Pretty straightforward. There is nothing much, complex in this. Advantages of auditing digitally. Very good, Viraj. Very good, Abharakesh. Yes. Anyone else? Advantages of auditing digitally. Yes, Viraj. Very good. Anyone else? Yes, Abharakesh. Yes, very good. Yes. So if I summarize, correctly pointed out, if I summarize, one, you have an improved quality of the audits. Second, you have a decreased human dependency because you implement automation and IT systems. Third, there's an increase in the transparency, automation and ease. Okay. Fourth, there's an improvement in the efficiency of the audit, and there are less chances of the errors because there is a less human intervention, so you have a more accuracy and efficiency in the audit. Fifth, you have a proper analysis and comprehensive data analysis done. Sixth, you can analyze a large volume of data compared to the traditional sample size testing. You can analyze the large data set over here. So you have an expanded scope of the audit. So by adopting the IT technology, okay, these are the advantages of auditing digitally. But there are certain things, considerations, that is known as a consideration, or you can say potential challenges, with respect to auditing digitally. So before you proceed with the auditing digitally, what are the things you need to consider? Before I proceed and go for the auditing digitally, what are the things I need to consider? Can anyone tell me that? Before I proceed and start auditing digitally, what are the things that I need to consider? Very good, Abharakesh. Yes. Anyone else? Anyone else? Yes, very good, Abharakesh. Yes. Okay. I'll tell you and provide you background. Before I start auditing digitally, first thing I need to consider is what are the problems that we are trying to solve? Why we want to, include auditing, why we want to start auditing digitally? What is the objective behind this? Whether is our objective is to analyze the large volume of data, bring efficiency, or do something different, or the objective is something different. So what is the objective over here? Like to reduce human dependency, or to analyze the large volume of data, or I could have an objective. Okay, I want more efficiency, improved efficiency, improved accuracy of the audit outcomes. So that is something I'm trying to solve over here, the problem I'm trying to solve. Based on that, I need to understand what technology is available. For example, if I want to analyze large volume of data, I may use Power BI, I may use Alteryx, ACL technologies to perform data analytics. But if I want to reduce human dependency, reduce human intervention, I may use RPA, I may use coding, programming languages, I may use Power Automate. So based on the problem, I will check for the solution. Third step is upgrading or analyzing the team, whether they have necessary skill to use the technology. I decided the problem, I decided the technology. Now, whether the team can use the technology to solve this problem. So, team, technology, and problem. The three things. And the last one is the timing. Okay. Cost and timing analysis of the technology. So, for example, if I have a, let's say, AI, okay, AI can solve my problem. Is it feasible to deploy AI, and how much time it will take in the deployment? So, feasibility of a technology, time limitation, cost benefit analysis, I need to consider before I implement the technology. All these things are required to be considered before you proceed to the auditing digitally. Clear? Any doubt? Any doubt, guys? Neha, can you explain your query? Like, during exam, how to learn and practice? Like, can you elaborate more, like what you want to understand in that particular part? Any other queries, guys? Any other concern or question that you guys want to ask? No? Okay. If no further doubts and no further questions, then guys, I would suggest before next lecture, please go through the lectures which are uploaded. Before next section, please go through the lectures.
Good morning, sir. Which lectures? I mean, which chapters? I mean, is it 13, 14?
Yes.
Okay. Thank you.
So, chapter number 13 and 14, please go through the lectures of that chapter. It will be helpful for you guys also to understand the concept.
Yes.
Yeah. And once you go through the lectures, please be ready with your doubts. So in the next session, I want you guys to, ask the doubts. Okay. So that, I can make this session very interactive. I don't want this session to go with a one way, like, I'm only providing information. That's it. If you have gone through the lectures, you will be able to, understand, and, you may have doubts, and we will be able to resolve your doubts, and that will increase your understanding about the topic. Okay.
Actually, sir, today's chapters are more of a theoretical. I mean, listing, and so I mean, I don't know. They are given. I mean, we can just study and go through. Matlab, there we can't raise the doubt that much in today's lecture. I mean,
see,
today's chapter.
I'll tell you on the today's chapter. See, chapter number 11 is a standard application, so there could be some doubts.
Yes.
Chapter number 12, digital audit. Now, what doubt could be there? Number one is that, some people have, or some student might face difficulty understanding certain terms. Okay, some students might face difficulties with respect to application of these concepts. For example, now how I am applying SA 315 when I want to understand the IT environment. Or sometimes what happens is it becomes a very straightforward. Just if you read straightforward, like you are just reading, you may not understand the logic until and unless you discuss the topic.
Yeah, that's true, sir.
Yeah, so sometimes discussions make you remember the topic.
Yes, that's very true, sir.
Yeah, so that's why I suggest, even though if it is a descriptive part, try to discuss, try to ask questions.
Yes.
The more you will discuss, you more remember the topic.
That's very true, sir.
Any other doubts? Any other questions?
Okay, thank you.
No? If no further doubts and questions, then thank you guys. Thank you for participating in today's lecture. I'll see you in the next session.
Thank you, sir.
Thank you. Yeah, session over. Thank you.